The most dangerous phase in trading, it's not when you are losing, it's when you start winning. Losses humbles you, but profit convinces you that you are special. And that's where the real risk begins. Let me introduce you to Samir. For 2 years, he did everything right. He journaled every trade, he fixed his risk per position, small size, strict stops, and no shortcuts. He survived flat months, he faced drawdowns and boredom. And then the curve started rising. Small profits became consistent profits. Consistent profits became confidence. And that confidence became his identity. Samir stopped seeing himself as a disciplined trader. He started seeing himself as someone who understands the market. That subtle shift changes everything. Overconfidence doesn't enter loudly, it whispers. Samir began to alter the way he traded. His position sizes grew a bit larger, his stops stretched just a bit. A journal note was missed and a confirmation was overlooked. Rules were not broken, they were adjusted, and that's more dangerous. Because, see, once rules become flexible, ego becomes the decision maker. Samir stopped asking, "What if I am wrong?" And instead he thought, "How much will I make if I am right?" That shift from risk to reward is where the structural damage begins. Professional trader operates in probabilities. An overconfident trader operates in certainty. See, probability is humble, but certainty has ego attached. Samir was no longer executing setups. He was predicting outcomes. He wasn't managing exposure. He was assuming control. He forgot one simple truth, that markets don't reward confidence. They reward structure. And then it happened. Market opened with a big gap and M2M screen quickly turned red. Volatility suddenly rose. Trade had a hedge, but position was too large and decision froze. Now the real test started. The stop loss was set and it should have been followed. But ego whispered, "Wait." Losses expanded. Now it wasn't about money, it was about being wrong. And that is the most expensive emotion in trading. The loss did not wipe out his account. Capital was damaged, but still recoverable. What was broken instead was his self trust. That night, Samir said to himself, "I misjudged this." But in trading, such thought, such sentence can destroy consistency. Because when you doubt your judgment, you begin doubting your system. And once you doubt your system, every future trade feels unstable. It was not because charts changed, but your internal stability changed. And due to this, the spiral begins. Entries were late, exits early. Profits were cut short, losses were hesitated. Same risk model but broken execution. Same strategy but unstable mind. Overconfidence caused one structural loss, and that loss cracked self-trust. Cracked self-trust created inconsistent behavior, and that inconsistent behavior created more losses. Samir was frustrated and blamed market has changed. No, he had changed. Market does not test your intelligence, it tests your emotional architecture. The day you think you have mastered it, it shows you how small you are. Trading punishes identity inflation. It does not punish humility. There are two types of traders, the predictor and the executor. The predictor needs to be right and the executor needs to survive. The predictor takes losses personally, but the executor treats losses as operating costs. Samir stopped being an executor and became a predictor. That's when his fragility began. Rebuilding capital is easier than rebuilding self-trust. Samir had to cut position size in half, return to journaling, remove opinion, focus only on process, and no revenge trades, no ego recovery attempts, and no I will win it back attitude. It took 6 months, not because market was hard, because repairing ego takes time. Market did not defeat Samir, his inflated identity did. Capital loss is recoverable, but confidence loss is structural damage, and trading never forgives structural cracks. Remember, you don't need to be smarter than the market. You need to protect your capital, protect your SIM system, and most importantly, protect your self trust.